Hello everybody, welcome to your weekend edition of Trader Merlin. Hope you all had a fantastic trading week out there. Ended on a high note, I will say, the way that this S&P rally going into the close, pretty much all day actually, just a beautiful uptrending day. Hopefully capitalized a little bit on that. It was an opportunity for me to close out some of my short positions, I'll tell you that. Cheers everybody, happy Friday. Hello Terry, Raj, Gary, Chris, Ivzy, Jorge, and Thomasina, and Ron as well. Good to have you guys all with us today. I have no guests, as you guys know I like to not have guests on Friday because then I get to drink whiskey more by myself. So I'll have a sip to that. Drinking a nice rye from a small distillery up in the mountains by Sacramento. All right, hello Gino and Tom as well. Feel free to send in questions as we progress through today. I have just a couple of them, but I wanted to kind of get through overall market stuff and look at some of the big picture items, as there was a lot of, I guess, technically important stuff, as well as some fundamentals. So I will kick things off with my wonderful graphic here, the Trading Week Wrap-Up. I had to pick a gold mine today because this week my trading was, I did well with gold this week. Gold, Facebook, and Akamai were the three that really were my focus this week, but gold did the bulk of the good news for my portfolio. So I decided, let's just put a nice little gold mine in there. Let's look at just a blatant tearing apart of the Earth's surface for my benefit. Okay, yes, I am definitely enjoying the whiskey, Lori. Okay, there was a couple questions, or one I didn't get a chance to get to about a week ago. So what I'm going to do is I'm going to go through a couple of questions here, then I'm going to go dive into a bunch of the market data, because as we get closer to the end of September, September's not looking very good, guys. All right, Armin sent this one in 2 days ago. It says, where do you see the next demand zone on the euro? And it's kind of a challenging one, right? Because right now that euro is not looking so hot. So let's go EUR USD. Right now, I mean, we're kind of in the midst of a free fall, right? You see a pretty significant sell-off here going on in that euro dollar, and you know, I kind of wanted to have this brought up with Sam Evans and David Warner, but I just didn't get to it in time. You look at that daily chart and you got to ask yourself, well, where is there any area of demand, right? It's nothing in here looks that great. Of course, we could go out and look at somebody like David Warner's kind of style, which said, well, we've got the 116. And certainly the 116 level would be an attractive point. I'll take it off of snap mode here just so we can see. You know, this is where I think we have to kind of take a combination of different strategies. You guys know that, you know, we're talking to Sam, he's really out there looking for supply and demand zones. And you talk to him like David Warner, and he's really saying, you know, while supply and demand zones are important, there's this mentality where we can see prices gravitate towards the quarter theory, right? 25 cents, 50 cents, 75 cents, and a dollar. And we could even break that up even more, but generally those are magnets to price. And we see quite often price bounce off of those. So on this chart, that 116 level, if I just put that horizontal line there, you guys notice it's really not that exciting. There's really nothing over here on the left side that would in any way, shape, or form make me feel confident going in at that point. So what I'm going to do is just break this down to a 60-minute time frame, and we're going to have to go add on extra time. How about 60 minutes, not 60 mon? All right, and I'll have to go and add in maybe, I think it's 30 days? We're going to have to go 60 days back just to give me a little extra flavor to play with. And I'm going to look for that horizontal line that I drew. Okay, so bear with me. The screen's going to look all weird as I scroll back through history to find that horizontal line, and there it is. So it's not, on the daily chart, it's not showing anything that's worthwhile, but if I break this down, it actually does come into a small area here of demand. There's also some that are a bit lower, and what I like to do is just simply map these levels out, so when going forward, I can see if they line up to anything that's significant, if that makes any sense. There's also one right below it. Okay, so now all of a sudden I've got 5 decent points. I would put one down here right around the 113.70, 113.80, but that area is not fresh anymore. It's old news, it's old hat. So now I go back to my daily, and I've got at least some reference points for prices to potentially bounce off of. And I actually do like that 116 level. So for those like Armin who asked me, where's my buy point on the euro? I would probably start at that 116. I think you've got one also at, let's call it 115.50. 115.50. You also have one down there a little bit further down at looks about 114.40. I'll probably 114.40. So those are points where I would be interested in this one right now, and I got to be careful here because you look at that trend. To me, it looks like this thing is rolling over. So I'm not really that excited about buying the euro right now. I'm more excited about buying the dollar, which means shorting the euro. So, maybe a better question for Armin here is, where would I be looking at shorting, right? So we can play the buy side here, which always like to be ambivalent here and show both sides of it. Let's go back to that 60-minute chart. And just real quick, is there anything that just jumps off at me as potential selling points that have been established over the past couple of weeks? And there certainly are. They're not the greatest level. That 118.65 mark, it's not excellent. Most of these have been all retests. Notice I'm marking off areas here. They've all been retested. So none of these are screaming at me as being very, very strong supply zones. But at least it does give me some reference. So if I want to go back out to the daily, I can now real quickly have a kind of a sliced up version of my chart, and as time progresses I can revisit those levels. So Armin, that's how I would do it. Right now I'm more of the mindset of you should be looking for selling points in this euro. You guys heard me yesterday, or when David Warner was in the program, I was talking about the dollar index, and I'm bullish. I'm definitely bullish on the dollar index. I think your equity markets are going to start to sell off, so we should see more upside movement in that dollar index. Today we had a pretty nice day. You can see that nice big green candle there in that dollar index. So the further we extend this move and get closer to this 96 mark, that's going to put more pressure on the equity markets to sell off. So there's my thoughts on the euro. Brandon says, buy Bitcoin. I agree. I got to throw myself in that camp. I'm biased because obviously I am I'm long Bitcoin, and I'm a hodler, so I'll be holding. Do I think that today is a relief bounce? I think, let me actually go to this next question because it really does pertain to what your point is right there, Brendan. And that was, where did it come from? This one came in today. Let me bring this up here real quick. From Heath. He says, why didn't we see more market sell-off based on today's durable goods orders? Great question. So for those that don't know, durable goods orders are items that last more than 3 years. Automobiles, refrigerators, microwaves, TVs, unless you buy those crappy ones from Best Buy, they're not going to even last you a year. But those are still considered durable goods. Toasters, things like that. Blenders, stuff that's going to last a little while. What was interesting is, I'll break up some charts here. We had huge volatile swings in that, right? Obviously, there was going to be a big contraction when COVID hit because all consumption pretty much stopped. But the question is, where have we come from since then? So I'll show you this chart here. And you guys can look at the durable goods orders for the last 16 years. Surprisingly, that you see this massive swing that happened back in mid-2014. That was kind of a crazy one where you see that really big swings. But for the most part, we don't really see anything breaching that 10% mark, right? Or the positive 10 here or the negative 10. Now, what's noteworthy for me, and what I'm hoping you guys can glue your eyes to here, and is these little, I guess they're copper or bronze little hash marks. So you see one right here. I'll put them at a little red line. There's one right there. Those are the expectations. And as you can see, the expectations on this hard red edge has been, let me clear all those off, has been dropping and dropping and dropping, okay? So you're kind of seeing this pattern here of a really aggressive, sharp decline in durable goods orders. And remember, that's coming off of this horrific 2-month period where we were just having awful durable goods orders. So it's this pendulum piece I've been talking about, which it just went way too far to one side, the contraction. Now all of a sudden we have the big expansion. It really begs the question, where are we going to go to from here? Because if you look at the current number, which is right here at 0.4, that's what came out today. They were actually expecting it to be a little bit higher than that, right? The current number, the number that came out today was 0.4, but they were actually expecting it to be considerably better. Not worse, but much, much better. That to me is obviously a rather negative sign, right? They're expecting it to be 1.1%. Previous month was 11. So, you based off this news, you would be thinking that this market's going to crater because durable goods orders are crashing, meaning consumption is all of a sudden just breaking down and no one's buying. I think that what we'll probably see over the next couple months is a dip back down. I don't think we'll get that extreme. I think it'll be something like this, and then it'll come back up. So right now we are worse than expectations. And the question from Heath was, why didn't we see a bigger market sell-off? Well, the truth was, if you saw what happened pre-market, we were looking really ugly. I mean, this market was really starting to sell off. I'll bring you up the chart for you guys just so you can see. Somebody might not be looking at the futures market. So I'll bring up the S&P futures, and I'll bring it up on a 5-minute basis so you can see what happened in that morning session. Obviously, during the trading day, it was just beautiful up. But here is what it looked like pre-market. Okay, and I'll put a vertical line where the equity markets closed yesterday, just so you kind of have that as a reference point. And let me scroll back over here. Okay, so big vertical line going up right now is where the equity markets closed yesterday. And I'll put it at 1 o'clock. Okay, that's where they closed. And I will put a yellow shaded box to show you what happened during the after-hours session and what was traded during those after-hours sessions. So here is the yellow box, and we'll go right to the open, which is right about there. So everything in that yellow box, guys, is all after hours or pre-market, depending on which perspective you're looking at it. And you can see we were really aggressively selling off last night, right until about 4 o'clock this morning. We bottomed out and started to bounce, which conveniently was right at the bottom of a demand zone that we had mapped out there at that 32.10. So it not a bad sell-off into demand. When we opened up this morning, those numbers came out at 5:30. I believe that was actually an hour before the markets open. So if you look where 5:30 is on here, it really didn't have that much of an impact. You would kind of expect it to be a little bit worse. Right here where my cursor is 5:30. It dipped for a minute, but really has not looked back since then. So it's been a pretty positive sign for the markets going forward. Now, why is that? I think this is Heath's conundrum, is you got this really bad piece of economic data. Why didn't it sell off more? Because remember, the more bad pieces of data that we get where we miss expectations and all of a sudden things look like a contraction, what ends up happening is that it's more pressure on the Fed to bring out more stimulus. It's more pressure on Trump and his administration and our government to add more aid or assistance to help people. Because obviously, if durable goods orders contract that aggressively, that means you're probably going to see more layoffs. You're going to see less spending, which of course less spending leads to even more layoffs, et cetera, et cetera, et cetera. So it's this domino theory of events, and I think right now what you saw was a lot of people just kind of a little bit of a relief rally, right? It was a fairly aggressive month so far. It's not done yet, but a fairly aggressive month to the south side, and I think you saw just maybe a little bit of a relief rally. And as Tilly Allison joins us today, she said, yep, the 321 low on the SPY, that's the level that Tilly's been waiting for it to bounce out of, and when you guys see her market outlook for next week, we'll be putting that one out Sunday morning or Sunday afternoon. You can find that one on my YouTube channel. She'll be mapping out some new areas and targets of distribution and accumulation. So hello, Tilly, good to have you with us. So let's see. Pepe here, loving that California weather, right? Yeah, I've got friends all over the world, and when they complain about it being 50, 30, 20 degrees, I'm out here in my 70-degree weather loving it. So cheers to my warm weather. I pay heavily for it, but it's okay. All right. What else do we got? Housing. Richard says housing has been doing good to help the durable goods numbers. Not only has housing been doing good, it's ridiculously well. I mean, we looked at the new home sales yesterday, blowing away expectations, which of course is great. It's a great sign of optimism and things moving forward. But boy, it just seems like it's just going to add to this bubble, which is really getting inflated. And the new home builders are building at a record pace right now, at least for the past 10 years or so. So yeah, definitely a lot of optimism in that real estate market. I'm still hoping to get some real estate experts on this program, but they're all busy doing other stuff and just can't spend half hour with me. Yeah. Tom Barr says, experts were expecting. Experts have an accuracy of what? Plus or minus 25%, right? Comical, but sad but true. Man, I sometimes I just want to be an analyst or somebody who does the forecasting because they are so colossally off. The best one out there, as you guys know, is the one who does whoever does the estimates for crude oil inventories. There was one, I don't know, it was probably a year ago. It happens just about every week, but they had an expectation of something like there was going to be, a surplus of 5 million barrels, and it came out at negative 5 million barrels. That's a 10 million barrel difference in inventory. I mean, I'd love to do the math behind what space it would take to contain 10 million barrels. My guess is it's going to be football stadium after football stadium to house that many barrels of oil. Just crazy. Brendan says Merlin's also a sign of a real estate top. Correct. And that's the challenge, is it not? If we have a market that's just absolutely booming, and let me see if I can bring up the new home sales chart for you guys. To give me just a second, it might take me a minute to bring that one up here. I'll hopefully show you this. I'm going to forexfactory.com, which has got a lot of great resources, but I want to show it wasn't existing home sales, it was new home sales that I was concerned with. Not concerned, but excited about. That was just a great number. Was that Thursdays? Yeah, it was Thursday. Here's the chart of new home sales. So bear with me. I'm going to drag this one over here. Hopefully get it all prepped for you guys. And Okay, so here is the chart of new home sales. Now, it's not perfect, but you notice how, I mean, damn it, doesn't this chart look exactly like our equity markets over the past couple of weeks, or past couple of months, I'm sorry. This is monthly here, so you're looking at, this is what's going to be the September numbers. So you got September, August, July, June, March, or May, excuse me. So this is really where these markets were bottoming out, and we're seeing almost 100% gain in new home sales. That's great, obviously, from a market perspective, because as I mentioned, these guys that work for Toll Brothers, Lennar, KB Homes, they're brilliant minds. They're not stupid people. They're not going to build homes that they don't think that they can sell. But doesn't it look odd to anybody here? I mean, look at that move. It's the sharpest move up we've seen in new home sales in there's 7 years. Let me scroll back even further. I mean, there's nothing that compares to it. It's just a colossal swing. Now, of course, I could go all the way back into 2006, 2004, and we're still not back up to those highs. But I think it's interesting to look at this and see how parabolic we've gone. I agree with Brendan. I think that this, maybe not Brendan, but others that mentioned it, is that this is that potential, bubble-licious type of moment where all of a sudden we've accelerated too far too fast. And I'd rather see it in a more sustainable trajectory. This last move up has just been really, really crazy. So let's see what else was asked. Someone was asking. Let me bring up. Here's copper. I'll bring it up on a daily because obviously if housing is booming, so should copper, and copper's up about 50% since those March lows. I'll go out to a weekly here just so you guys can see a little bit better perspective. But everything seems to have this just crazy run from those COVID lows, and it's understandable. Of course, we talked about reasons why, and that's the Fed and the government putting in trillions of dollars worth of capital to boost these markets to the upside. So all in all, looking very, very bearish on all fronts. I just think you got to keep an eye on it and be ready for that moment. If anything, you should be protecting your portfolio. If you're long, great, stay long because that's what the market's dictating. But certainly be careful. Maybe you buy some puts as protection for any of your positions because as we get higher and higher in the S&P, those puts probably going to be cheaper and cheaper. All right. All commodities will be bullish over the next 5 to 7 years. I don't know. It's a tough call. I mean, we could all make statements about there were probably bullish and bearish periods, but is it going to be a net bullish? Probably. Certainly, I think you need to see some things happen with that dollar. It was interesting. You talk about interest rates, right? And one of the things that we've been concerned about here in the U.S. is as we have so much money printing, and this is something you guys all should be thinking about. Brendan, who's with us today, is one that just thinks that fiat currency is dead, dying, going the way of the dodo, and we should all run from it. I tend to agree with him. However, that's going to take some time to happen. It's the ability of central banks to manipulate their currency which gets them into problems. And if you look at what's been happening with Turkey, for example, today they announced a rate increase. Now, isn't it funny for the U.S.? We're increasing or decreasing rates by like 25 basis points, right? That's a quarter of a point, right? Quarter of 1 percentage point. Today, Turkey increased by 200 basis points. Basically, a full 2% increase. It went from 8.5 to 10.5 for their rates. And you try buying a home when all of a sudden you got a 10.5% mortgage. That's going to really try to constrict things. But the reason they've been doing it is they've had such aggressive money printing to help themselves. Their lira's just been getting weaker and weaker and weaker. Now all of a sudden they're starting to see the impacts of that with inflation numbers spiking and potentially hyperinflation. So Turkey's in a world of dirt that you just don't want to be involved with. But maybe take some warning signs because we are printing pretty recklessly as well. Okay, let me see. If you guys have questions, feel free to type them on in. I'm going to continue on. I had one more question, then I'm pretty much free for the day. I love it. Free as a bird. Since I was talking about Nikola so much, I actually talked about this on the webinar with Brock Pierce and Jordan Matthews the other day. Nikola, most know my opinion of Nikola is probably not the most positive. I think that it's someone just got a ton of funding for a pipe dream. Of course, GM bought into this. And GM buys into Nikola, and all of a sudden it gives it an air of legitimacy. So Mark asked this morning, where would I buy Nikola? It's a tough call because I'm not that... If this was gamble money, let's put NKLA up there. You guys all know me well enough to know I'm probably not going to buy a chart that looks like this. I mean, this is from rising from the ashes and straight back down to just almost near death. I'll go to the daily chart here, and it's still trading at $19.46. What's interesting is I believe the warrant was for 5 years or 10 years, okay? Not sure which, I think it's 5 years. So what they're expecting is 5 years out that the price of Nikola would be $25. In 5 years, that was what these warrant strike prices are. And the premium was they're going for $10 premiums. So someone was thinking it'd be $35. That's when this thing was trading at 70. If the initial warrants were written at $25 for 5 years out, to me that seems like a fairly logical target. Some accounting team came out and said, all right, we think that that's where they'll be. Right now, I don't know. I have to look at this from a long-term perspective. I did nail it on the Nikola from 70 to 30. I'm hoping now the Snowflake is the next one, right? I said that I think it's November 19th, Snowflake will be $150 or less at some point during the next 60 days, simply because all the hype and hysteria that Mr. Buffett and the financiers have pushed behind Snowflake. But it doesn't mean that this company's garbage. I have to really emphasize that. It doesn't mean this company is absolute crap and going to disappear. Nikola could do very well. It certainly now is starting to get some players in there. You saw, I think it was BP actually backed out of building hydrogen stations, which is part of the reason you saw this really aggressive sell-off here in Nikola. That's a little bit dangerous. If you have somebody who's responsible for building out the infrastructure for your hydrogen vehicle and they don't want to do it anymore, you don't have any place for people to take your car to. So all of a sudden, it's just not going to happen. So long term, I don't know. I'm looking at this price point right here, right around $13. If it gets to 13, I might buy some leaps. I might actually buy something of Nikola. I do think that they have a long-term potential. I like the vehicle. I like the concept. I think that this is where we are headed with regards to that space. But I'm just not comfortable putting my actual trading capital in it at $19. Gamble money, I'd set aside a gamble account, and I might be okay with doing that with it. But Nikola just scares the bejesus out of me. Leighton says, so Merlin, in case I missed it, what is your adult beverage of choice today? It's generally whiskey. Whiskey is usually my sipping with a nice little ice cube, so not the rocks, on a rock. But today is what is this one? I can't remember. It's from a micro distillery called Dry Diggins. I actually like going and try to find the real local micro distilleries. Dry Diggins up in El Dorado Hills in Sacramento. That's a nice rye whiskey. It's delicious too. Richard says, Nikola will get purchased by GM. Be careful. I don't think that they will. Here's why. I think GM understands that there might be too much risk for them to take it on as a whole. What will probably happen, and if I'm GM, this is what I would be doing too. I would be doing a quote-unquote roadshow and trying to get other investors to buy pieces. So I would go out and look at somebody in the information technology space who would help me in this regard. Prime candidate is going to be Apple. Another prime candidate would be Google. So if you could get Google or Apple behind a electric vehicle, GM uses its infrastructure and market knowledge with regards to the vehicle, assembly, construction, all that stuff. And then you have the back end, all the technology, the networking, the infrastructure, the GPS, all that stuff done by Google or Apple. Now all of a sudden you've got a big player backing you. So it's kind of like I was talking about with an IPO. When an IPO comes to market, if it's a great company, the underwriter's not going to try to get help. They're going to just sell it all themselves. If it's a mediocre issue, they'll go to, let's say I'm JP Morgan, I'm going to go to Goldman Sachs and Wells Fargo and Merrill Lynch to try to unload some of my risk. To me, that's what GM should be doing right now is pushing others to buy into Nikola so they can spread off some of that risk. I just can't see them buying it on their own. Yeah, Joseph says Amazon has their own clean trucks now for delivery. They're also in bed with Rivian. So you have Amazon and Ford are backing Rivian, which is an electric vehicle as well. And I think that that's going to be the current trend. You'll probably see a few other big name tech firms and an automaker, because Ford and Rivian are together. Wouldn't surprise me to see with Nikola that you get somebody like a GM, and then who knows, maybe even Peterbilt or some major big truck manufacturer come in. So you have GM, and then you get like Peterbilt or Mack Trucks to all of a sudden partner for the big rigs, and then you get somebody on the technology side and offset that risk. I think that's what you'll see, but who knows, I could be totally wrong. What else do I have? You guys, if you've got something you want to discuss, let me know. I'm happy to go over it. I answered all my listener questions, which I didn't think I would get through it. While you guys didn't questions, let me just do a quick little wrap up here, because we talked about at the beginning of September how historically it's the only negative month that has a negative rate of return going back in like the 1920s. Dangerous, of course, but I think you should know that going into the months, like what are the historical averages. This month has been pretty bad. Historically, this is going to be one of the worst ones you've seen in quite some time. I'm going to go from worst to first so far. And remember, we're not done yet. We do have a couple of days left, right? We have 3 trading days left for this all to come to fruition. But the worst performer out there clearly has been the NASDAQ. NASDAQ has been just brutal for the month, excuse me. Had a rough week as well. For the week, for the month, you're down 8.75% for the NASDAQ. And it's not from this peak, guys. I'm not measuring off the peak. Remember, the month did not start at that peak. The month started right here, and I'll show you. Let me go snap mode so it's actually more precise. And I'm using this is the futures. Normally I do this off the ETFs. So let's go there, and then I'll show you from the first day, which is right there. So if you go off the futures, it's 7.95. If you go off of the ETF, it's 8.75, and that's because of after-hours trading. But you guys get the ballpark idea. Most of the indexes are fairly close. S&P, which is down here, was down 6.14%. Russell was down 5.67%. Dow was the best performer, believe it or not. It was only down 4.26%. But here's a couple of other interesting ones. You had gold and silver. So here's GC, which for me was a great week from the short perspective. You know, we talked about that descending triangle on it. Just had some nice little follow through there on GLD, so or on the gold futures chart. Great. I do still think you're going to see that maybe hit down to 1827, somewhere in that ballpark, which could make for a buy opportunity if you're looking at going forward. Crude oil also had last couple days have been really quiet, but for the month, down 6.89%. Really, most of it happening in that first couple days of September as it kind of fell away from this area where it was just going sideways on. So those are your major market movers and indexes for the week out there. Iveco is already in for heavy duty trucks. Yeah, Tom, are they in with Are they in for electric trucks? Because again, if you have somebody like GM and your Nikola, it's easy now for you to all of a sudden be accepted in the vehicle space. You need somebody. Iveco would be great. I don't know if I pronounce the name right. It's Iveco or Iveco. Would be great for them from the heavy duty truck space. And are they already in? Is that what you're telling me, Tom? You probably know way better than I do. I think you did tell me that they were already in with Nikola, and that all of a sudden gives you much more legitimacy there. Let's see. I saw Brennan's that it looks like a big scam. It could be. I don't think so. It'd be very interesting to see what happens with this legal lawsuit. This fraud case that's going with Nikola, and of course we know the company is maybe saying some things that we're not quite there yet, right? Pipe dream type of stuff. It's almost like Battery Day. Did anybody actually watch Battery Day with Elon Musk on the 22nd? It was interesting. They were going through all of these crazy innovations, which I watched it and I was actually fairly intrigued by how they were taking existing technology, increasing the efficiency, changing a couple things here, a new design manufacturing process, and all of a sudden the numbers of efficiency, of durability, of longevity, of power all increased to a factor of 58% gains overall across the board. And I'm like, wow, that's amazing. It hasn't happened. This is pipe dream. They're expecting it to happen. And I think that this is where maybe Nikola got in trouble, is saying that things were already in place that were not. There were ideas that we're looking to put in place, and of course that caused the CEO to have to step down and walk away with only $1.6 billion worth of stock. Not too bad. Okay, good. Yeah. So they do have electric vans. Well, there you go. These guys, this type of... Where are we going on the dirty Ponzi market? No, I don't know. I don't know if it's a Ponzi. All right, you want an S&P. Let's go with that guy's S&P. Why not check out the S&P? So S&P, we've had those levels drawn for quite some time on this S&P. Bounced off of it. I won't go too in-depth on analysis because that's Tilly. Tilly is going to be the one who's going to be doing all the market analysis this weekend. But totally expected there to be a bounce on this one. It's had a pretty significant sell-off, and it came right into that area of demand that you had mapped out. So it wouldn't surprise me to see this thing rally back up. What I do want to show you, because we talked about it earlier in the week, was the 50-period moving average. Now, it's not, the most critical piece, but it is right here. We're still well below that 50-period moving average, and as I mentioned, you see it slowly rolling over here, right? It's just slowly traversing sideways. If it starts to roll over and starts to point down, then all of a sudden we could get more selling or continuation of the selling pressure. But it would not surprise me to see this thing bounce back up towards that. It's going to put it just above that 3,300 mark on the SPY. But to me, that's your logical target for next week. Show you my current trades. Well, I'm not going into other accounts right now. I can tell you what I'm in. I am short Facebook. I am long. God, I can't remember the name. I bought this cannabis stock I've been holding for a while. I don't know. It's a penny stock a friend of mine was hot on, and I just threw some capital at it. It didn't work out. So really, the only thing I'm in over the weekend is going to be Facebook. Facebook short. 200 shares of Facebook short. Other than that, I'm not really anything. Let's see. Historically, before a presidential election, the market tends to... Well, actually, historically, markets are up in presidential years. And that is a long-standing thing, that during presidential years, markets are up. Let me get away from this and go to SPY, just so we can put a marker on the beginning of the year and see where we stand with regards to that. I personally think that the high is in for the year. I think you'll probably see this market drift down. The question is, do we end up getting low enough to call it a negative year? So where would that line be for us to be negative for the year? Right now, we actually just tiptoed into it, all right? We just tiptoed into negative territory for the year. That black horizontal line is the opening price on January 1st. So it's right around 323 on the SPY. We just bounced off of that. I think we're going to be dropping this year. I don't know the historical right before the election. Bottom line is, I think we've got a ton of uncertainty out there with the candidates and policy, and if you're in the same camp as me, it's just getting more and more frustrating, regardless of my political affiliation, listening to either side or both sides talk about what they plan to do. It's like I just feel like they're not even fighting for my rights or my country. It's about their own personal interests, and it just drives me nuts. So I think that's just going to usher in more uncertainty, which means more swings like this. More swings like this big move we saw off the peak here. I not necessarily down, but I think you're going to see a lot of real volatile stuff as we get closer and closer to that election and figure out exactly who who's going to take over the helm of this economy and continue to move it forward, which will be very interesting. All right, so Alpha Delta's like the S&P supply zone on the 144. You're talking 144-minute chart? You got 144K. Just want to make sure you got the right thing I do. Because I don't know, that terminology is not one that I use. But let me take these lines off. Actually, we like those lines. So you like 32,946. All right, put it on there. I'll throw it up and see what we can see with 32,946. I mean, we're coming right towards it. I think the reason I like 32,946 is because it's right in front of that 3,300. Right, 3,300 is going to act as that whole number psychology, and I think that's a probably logical bounce point for it to go back up, hit that, not too far away from where we're currently at, right? 32,940, probably go 95, and put that in there. All right, and yes, I would put mine right in that, just about the same spot. I mean, I think if you're looking for a supply zone or an area really where you just think it's going to come back up to and bounce out of, it's going to be somewhere right in here. That's the quick and easy spot for right now. Obviously, there's one that's probably going to be a little bit better, and that's going to be just a little bit higher up here. But we'll let Tilly handle that one on this weekend market update, which she'll be doing for us here shortly. All right, what else do you guys want me to look at? Oh yeah, I don't use share bars. Sorry, Alpha. Hey, don't use them. I tried them in the past, and they just don't really work for me. I know some people love the share bars, but yeah, never been my thing. Not that they don't work, just not for me. With regards to crypto, Brendan is probably the resident expert on the crypto markets, but there's something interesting. You might have seen in the news that Kraken, who, when I was doing the crypto class years ago, they were so bad. They were pathetic exchange. Whoever designed their platform was like a 4-year-old with a bunch of crayons. It was horrible. So I kind of moved away from. I still have some EOS sitting at Kraken just because I needed something, but they were just terrible with regards to their platform execution and all that stuff. So what I did is, what you may have seen is Kraken actually got approval to be, what is it? I think they got approval for bank status, like they're an official bank now. So Kraken what this does is really interesting. It now bridges the cash money side and crypto under one roof. And they're really the first ones to do that. Even Coinbase isn't registered as a bank yet. So I think that's a very interesting step as for those of you who are out there looking for legitimacy with regards to the financials, with regards to the crypto space. This is it could be a big change in that space. Yeah, there we go. All right, what else do I got? Pay attention to NIO during the Beijing Auto Show. When is that, Jeff? I know NIO. NIO is certainly one of the hotter ones out there. It didn't come up. I was kind of expecting it to happen at the Battery Day. I was watching some chats. I was in a couple of chat rooms that had thousands of people, and everyone is just hammering NIO. But I'll bring up NIO. A lot of people thinking much more bullish on NIO than they are on Tesla. Of course, when you have a stock that's as cheap as NIO, it makes it much more attractive. But remember, we got to deal with float and outstanding shares. So let me bring that back up. Where is it? This is what happens. So I'm on this software, and if I use my arrow keys, it shifts to a different screenshot. I just forgot to move it over. I would love to see that if it really did. Yes, and that's the other part, is it allows custody for crypto, so you can do a ton of things. It just offers a tremendous amount of flexibility, and I think what will happen is that's really one of the first pieces that will help legitimize the crypto space. We've seen the exchanges. We haven't seen any too really big heist or bad pieces out there, and all of a sudden you're seeing them get bank status. That's a major step. Okay, so here's the NIO chart. When we talked about this on the show with Jordan Matthews and Brock Pierce talking about the hot stocks, and clearly NIO would be in that category of being one of the hot stocks just because of its trend, although it's not as volatile as some of the other stuff that we've seen with regards to, just boom and bust. It may have a bust day eventually, but right now it looks like signs of strength. So NIO, obviously right now actually is probably not a bad buy point if you're looking at this trend line. I could even put moving averages on here for you guys just so you can see the moving averages are probably going to be snug to price. Let me turn this 200 into a 20 period moving average, which will probably be rather close to where current price is. Actually, we're probably just below the 200 or the 20. Yeah, there we go, just below it. But you're kind of hugging these moving averages. Things are trending up, not really curling down. It looks great for NIO. Again, for me, it would be challenging because I like to know a little bit about the company, and I have a hard time buying Chinese companies just because of the lack of trust of the reporting agencies. And Mario, it doesn't mean that they merged. It doesn't mean that Coinbase has merged with USSA Bank. They might have partnered with, but that'd be cool. I mean, the more visibility we get for crypto, the more it legitimizes it. My thinking on Facebook, well, basically as it broke down below here, this 261 mark, right? Was my interest point. As we got below it, I just shorted it, and my expectation has been and will be, even when we had Don Fran on months ago, that this is going to fill this gap. So I'm watching this right now. I'm short on it from the 260 mark, looking for this thing to fill that gap. That's my Facebook trade. Simple, about as simple as I can make it. All right. Let's see. NIO 1458 long, huh? Yeah, sure. If you're going to talk about buying, is that where you bought or you're looking to buy? Because I would probably be looking at 14, but still. Yeah, 14. Brendan, you guys probably didn't remember this show back then, but years ago I made a bet with John O'Donnell that that Bitcoin would hit a market cap of $1 trillion before Apple. We were this close. It was so damn close on that one. I was really shocked at how quickly Bitcoin was just started accelerating, and we got real close to beating Apple to $1 trillion, but then all of a sudden, obviously the bottom fell out of that one and came ripping back down. All right. Let's see. It's looking like it's a down near a demand zone, but going sideways like a lot of FANG stocks. Yeah, it is, especially with Facebook. I would say it's going sideways for the past week. I just felt that this move has been way overdone, and I think that what you'll get is people now rotating out and buying value. Because I don't think we could make the argument that Facebook was a value stock at $300 per share. It's a growth stock, and that was generally what people were running for, was the growth. Show me the move, show me the gains. I think now you'll probably see some money pull out of those as the smart money is realizing it's a little bit overdone, and they'll start to buy companies that have more potential value prospect for their portfolio going forward. Where was that one? I saw one in here. What's your take on adding more to winning positions instead of taking profits early to reduce risk? I love it. I love it. And here's, it needs to be done with a purpose. For example, I'm gonna need a sip of whiskey for this one. If you're in something and it hits your target and then just keeps on going, you could, obviously, if you didn't want to take any profits, you could just keep rolling it, right? And I call it snowballing, where it's like if it pulls back and comes to a demand zone, add your position. Comes back down, pull to your demand zone, add your position, and keep on going. The only problem with that is when you're adding to multiple positions, and I wish I could draw better, every time you're adding to a position, so let's say you start with 100 shares, and then it breaks through your supply zone, comes back down, tests the demand, you add another 100, then another 100. If it has a pullback, that pullback no longer needs to be as substantial as before to erase a lot of your profits because your share size is much bigger. If you had 100 shares and you allowed a $1 pullback, that's fine. But if all of a sudden you have 300 shares and you allow a $1 pullback, it's $300. So you have to keep that in mind as your position gets much, much bigger. It's like, how much am I willing to give back of that as it continues to move in the direction I thought it was going to go? Other than that, I am absolutely a fan of adding to positions. I mean, if it's trending, keep going with it, right? No reason to not do that. And this is the challenge we all have to face. I am definitely one that likes to take money off at targets in kind of markets I'm not comfortable with, right? Like choppy markets, I'll take half off, no problem. In a market or a security that I see has a real great trend and everything looks good, I'll just keep on buying, just keep on adding into it. I do that more so in short-term intraday stuff, right? When as a longer-term investor, I just don't really like holding overnights too much. There's a rarity where I'll take one, like Facebook over the weekend. But if you day trade, if you're an intraday day trader, rolling a position like that, snowballing into a position, it's commonplace. And if I was in something that was running, I'd just be keep adding 1,000 shares at a time. Click, 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 click. And all of a sudden, I'm in a pretty big position. If it starts to move against me, though, I have to be very quick and dump the whole thing and get out. Right, so that's the only challenge there is you got to make sure that if it does start to move against your position, that you immediately get out and don't hold it because now it doesn't need to fall as far to erase all those profits because you have so many more shares in there. Brendan says, I think after the election, markets will melt up. It's a tough call. I mean, I think that's as good a guess as any. And no really clue what is going to happen with regards to this market. And I think it has a lot to do with the party that's elected. But, it could easily melt up. Absolutely. Because we remove that level of uncertainty out there. We should all pick zones and set them for practice purposes. Well, this wasn't designed to be like an XLT session. This was designed just to be talking about the markets. But we could do stuff like that. Merlin, we have opposite psychology. I'd freak out doing that intraday. Really? You know what? To me, I don't even get... My pulse doesn't even quicken when that happens. When I'm in something and I'm in, 1,000 shares and I add another 1,000 and 2, 3, 4, 5,000 shares... I don't even worry about it. You just have to be on it real quick to be able to get out. And this is a problem that a lot of traders will have is they don't get out. On that note, I am going to be doing, next week there's a webinar called GPS, which is guided practice sessions with Todd Davis. That's going to be for Online Trading Academy. And then a week after that, I'm going to be with Bob Dunn and Bill Henner, who are guys who spent, 25, 30 years each on the floors of this exchange out in Chicago talking about war stories. And a lot of it will be about that, about opinions, about psychology, reading people's price behavior. That'll be in October 6th, so mark your calendars for that one. I think it's Tuesday, October 6th at 4 p.m. Really looking forward to that. It's always fun talking to old Chicago floor traders, real Chicago floor traders. Merlin, what's your opinion concerning large amounts of money moving out of the market over the past few months, and where is it going? It's always going somewhere, isn't it? Surprisingly, I think that a lot of it's going into buy real estate. Because right now, if you go into the real estate market, it's obviously competitive and priced up. I mean, the house I sold in Austin, Texas, I sold for $360, I want to say 4 years ago, maybe 5 years ago. I looked at it today, it's worth over $800,000. I mean, things are getting bid up out there. But think about it, if I can buy myself a piece of real estate and I can get sub 3% on the 30-year fixed, that's a great investment. That's a great investment over the course of time, assuming that housing markets continue to go up. So I think a lot of the money is actually going into real estate. I do think you're going to see it shift and move into some other investments. So we've seen a big pullback in the FANG stocks, the ones that we talked about so much, fueled this market to the upside. I think you'll see, maybe money come back into consumer staples or some of these downtrodden ones. I hate to say airlines, probably not cruise ships, but I think you'll see some people move their capital into those because there are such value right now in them, if there's a belief that those will come back eventually, and I think that they will. Okay, let's see. If you can drink whiskey on the show, we can paper trade. Sure, paper trade all you want. Okay, let me go through your economic calendar for Monday, just so we can get that out of the way, and if you have any last-minute questions, I'll gladly go over those. Here is what happened today, and I think I'm sorry, this is what's happened. Why do I have my dates all wrong? This should be Monday. So this is what's happening on Monday. I think I just got them backwards, out of order. Not a lot really of important stuff happening for the U.S. markets. You can see we've got member Mester speaking from the FOMC. There were really like 8 announcements of Fed members speaking this week, including 4 from Powell. And I think that they did create some uncertainty, but nothing as bad as I thought. I actually thought there would be much, much more volatile swings than we saw this week. So this is what's happening. Euro has German preliminary CPI next week. It's right now. It's put it all day. They haven't set a specific date. You got Bank of Japan summary of opinions, also Tokyo core CPI numbers, and then probably one of the more important ones will be the ECB president Lagarde will be speaking. Always interesting to see what they say. All right, and this is what happened today. That's the durable goods orders I was talking about. You can see down at the bottom here in red. That was the big miss. And we went from 11.4% to 0.4. That is a huge pullback. And to me, it's kind of a bit of a shock. I actually thought we'd come out maybe 1.5, 2%. I thought they were overdoing the estimate here as they have been doing with earnings, just to goose the system when we finally beat those numbers. So it was kind of surprised to see that miss on durable goods orders. Joseph says, is there a trade in airlines if a merger happens? Which airline stocks would we buy? I don't know. I don't follow that sector that well. I mean, I obviously would be going with the big names. You could also go with like jets. You have an ETF out there for jets. You know, UAL. I was a buyer at 25 on this, and I kind of wish I was executed. I wish I was filled because it rallied up to 50. But long term, and look at the weekly on United Airlines. You know, you look at the long-term picture here. Let's be honest. Yeah, Brendan, creature from Lagoon. Yes, Lagarde is an interesting one, isn't he? I look at this and I don't know if we'll get back up to those all-time highs on United Airlines. That's because they were spending so much of their own profits buying their shares back. But you know, $50, $60 doesn't seem unreasonable for United Airlines if it gets its feet back on the ground and we get past this COVID, which to me seems like we are. I'll just keep my COVID thoughts out of it. We won't make this political in any way. I would also I'm always a fan of Southwest Airlines, LUV. I think they're great at what they do. And, you know, you look at them, they're still down 50%. JBLU. Oops. I think you kind of got to go through and look at the fundamentals. Oops, JBLU, and find out which company you think is best. Which one's going to provide you with the best opportunity out there. There is a ton of airline stocks. Carnival Cruise Lines, what's Carnival C? I thought it was CCR. Carnival Cruise Lines. Oh, CCL. There we go. I can't remember off the top of my head. You got one like this. You got right, Daniel. Feet off the ground. Yeah, CCL. Thanks, Raj. It's trading right now at 1507. You know, I still think that this is going to be one that most people are not going to want to get on after this. A cruise ship is a luxury thing. You don't have to take a cruise ship to go somewhere. Airlines, you need a plane to get somewhere. So I'm definitely much more positive on the airlines, but boy, Carnival Cruise just still looking awful right now. Brendan says, I have no interest in stocks that are going to yield less than 100% to the upside. Well, I mean, look, a lot of these probably could yield 100% upside in the future. Just don't know at this point. Time will tell. Time will tell how this whole COVID thing pans out. I, for one, am just hoping we get our lives back. This ain't living, cooped up in our house going crazy all the time. All right, guys, that's going to do it for me. Next week, I've got 2 new guests on. I'm trying to get on the program. I've been fingers crossed trying to get them on the show, so I'm hoping I have 2 new guys for you. If you have anybody in particular you want to bring on the show or have me interview, I'm happy to do so. Just let me know who they are. You can send in that comment or question. Just go to tradermerlin.com. You can send in your suggestions there. I'm happy to do it. Pictures, comments, whatever. If you look at the guest list on the website there, I haven't updated. I'll do my best to update the website at tradermerlin.com. But you can always send me questions there or comment down below the video. Let's see, since we were going to end, but Daniel wants to know about BBBY. Bed Bath & Beyond. How did it go from 4 to 14? Great question. I mean, who knows? They've obviously come back online. They're certainly doing online sales and stuff, but, look at this chart. See, to me, Bed Bath & Beyond was screwed long before COVID, right? I mean, this thing's been selling off since 2015. Why? Because every single thing that I can get at Best Buy, I can get on Amazon. It will be delivered tomorrow at probably cheaper price. So while it looks beautiful, I mean, and it really does. Let's go .D. This is a great looking chart. I don't know. I'm not interested in it. Who knows why it's moving the way that it is? No clue. I mean, it's like Overstock's chart we talked about a while back. Yeah, Joseph was asking Amazon. Yeah. I'm trying to get Manson on next week. He said he will come on here very, very soon. Let's see. CCL in support. It's hard to say. I mean, is it support or is it just going sideways, right? And I see your point, NJ. I absolutely do. You're looking at it going, well, we've come down into this low point. Yeah, I get it. And that does make sense. But are we moving up? Are we just kind of traversing sideways? I'm going to leave this box on here. It's a huge range. Don't get me wrong. This thing goes from $13 to $19. That's a monstrous range. It's a 50% range. But yeah, I don't know. I don't think that that's necessarily the bottom of it and it's going to all of a sudden rally up. But going forward, could we play that range and buy those lows at 13, 14 bucks and sell those highs at 18, 19? Absolutely. Absolutely. Yes, Raj, brick and mortar crash. But if you look at what Bed Bath & Beyond is, they are really brick and mortar. They got a ton of brick and mortar. Yeah, they do some online stuff, but it's really about their brick and mortar stores. Going forward, I think the big thing for me will be interesting to see what percentage of big online brick and mortar retailers like your Kohl's, your Bed Bath & Beyond, Best Buy ultimately disappear. And what happens to that real estate space? How significant of a change is it going to have on our economy? I mean, it's one of these things that keeps me up at night thinking, is Amazon just going to buy? We're hearing about Amazon buying malls to make distribution centers. I mean, if you Best Buy, it's tough. It's tough to keep up with something that delivers straight to your house with lower fees, lower cost, lower everything. I don't know. Who knows? You guys might remember, Amazon started as a bookstore. Amazon started as a bookstore and it's competing against a company called Books A Million, BAMM, and it was really, really one of the hot stocks of the day. A bookstore. Books A Million was one of the most volatile, crazy, sought-after stocks in the late 90s. I couldn't believe it. All right, guys, that's going to do it for me for today. I hope you guys enjoyed today's show. Cheers. I hope you have a nice frosty beverage this evening. Have a fantastic weekend. I hope that you go spend it with some family and friends and enjoy it. I will see you guys on Monday for another week of Trader Merlin shows. Again, send any comments, feedback either below the video, click that like button, or send it in at tradermerlin.com. I'll see you on Monday. Take care.